And a lot of people thought, oh, it's not going to get through its high anytime soon, because they're not cutting rates until next year. But that type of energy is already building, and the expectations for rate cuts next year are coming. And what gold does generally is it front runs. Gold will move well ahead of time because those who are trading gold in big momentum and big leverage, they kind of understand what's happening and they kind of front run it.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and quite excited today because someone who is a pillar of the silver community, one of my longtime teachers, even long before I started doing videos here on the Arcadia channel, is James Anderson of SD Bullion, obviously an expert of the silver market and quite well versed in things that are going on. And James, it's been a while since we've had you on the show, but couldn't finish 2023 in rightful fashion without checking in with you again. So lots to talk about in the gold and silver markets these days, especially on the heels of Sunday night that saw new record all-time high for gold. Didn't last too long, but plenty to dig into. So welcome on back. Great to have you here. And how's everything going with you right now?
Good, Chris. Thanks for having me back. It's always good to be back here on Arcadia and speaking with you, of course. And yeah, it's been a little too long, so we're got a lot to talk about, lots to catch up on.
Yes, and I'm going to pull up the chart from what we saw Sunday night, where I think people are pretty familiar with it by now, but we had a spike following some touching on a new high last Friday in the session, and then here we see in the gold market opens about 2070-ish, gets up actually above 2150. Came back in quite a bit, had a rough Monday and Tuesday this week. Silver, not as extreme, but a similar pattern. And why don't we start there? Just any thoughts you have on what we saw and perhaps why it's happening and anything else along those lines.
Yeah, so I think this happened right as the market opened and the Globex trading, or the area where China's not even open just yet, and it's the lowest volume time in terms of trading. Typically it's one of the lowest, and to move the market either up or down in that time frame doesn't require as much capital, I don't think, as it might require if you tried to pull that at like 9 a.m. in New York. So the speculation was, why was that happening? And everybody has their pet theories, but nobody really knows because we don't work in the levered comics derivative and London casinos, and we don't know exactly all the different players, and we can't speculate as well as probably they might. But even then, like we were talking in the pre-interview about how, in my experience in this industry for the last 15 plus years or so, talking with people who worked in the 1970s, 1980 bull run, there would be kind of a competition on some of the major trading desks a lot, where reporters would call the desk on a day where there was volatility, and the traders had a competition amongst each other to see who could say the most nonsense and get it printed in the paper as being the reasoning for why the price moved. And that was, basically it just shows that when you read things in the paper about why things did what they did, I mean, take that with a grain of salt, because the markets are kind of opaque. We don't really know exactly what's doing what. But I mean, ultimately, last Sunday night, there was a bunch of reasons that people came up with. I mean, we had some type of drone bombing on stuff on various boats in the Red Sea or near the Suez Canal, and the Pentagon immediately pointed at Iran. And so Iran is one of the major remaining Middle East countries that the Pentagon, long since the early 2000s, and neocons have been trying to subvert and overturn. I mean, they had a list of like 7 countries, and they pretty much knocked them out. I mean, they had Syria, Libya, Iraq, Lebanon. I mean, you name it. A lot of these countries have kind of gone by the wayside. The old Soviet client regimes, they wanted to topple those regimes and pincer in, Russia. And in doing so, they made Russia and China become better, closer allies. So bravo, Pentagon. But yeah, that was one thing, one reason people perhaps thought, oh man, we're escalating in terms of war. The other one is just simply technically. I mean, if you were trying to blow out people who were on the short side, if you came in and just blew out the price quickly, you'd all of a sudden get them algorithmically stop lossing quickly, and the price would zoom up, and then you could at that moment, then sell and take a huge profit from getting them when their feet were, when they were on their back feet and not realizing that attack was coming. So it could be another form of just a short-term manipulation upwards to try and make a short-term profit really quickly, because a lot of people on the short side have become a little bit complacent because last 3 years we've been moving sideways. And a lot of people thought, oh, it's not going to get through its high anytime soon, because they're not cutting rates until next year. But that type of energy is already building, and the expectations for rate cuts next year are coming. And what gold does generally is it front runs. Gold will move well ahead of time, because those who are trading gold in big momentum and big leverage, they kind of understand what's happening and they kind of front run it. And so that's probably what this is. It's just the beginning of the eventual move toward 2,500, 3,000 in the next few years. So I'm pleased by it, because when you break a chart and you look at a chart, you can see that 2,100 has been eclipsed. So it just makes the room for eventually getting over 2,100 and sticking it and going to 22, 23, all that much more easy, because you've already busted the ceiling.
Yeah, that makes sense. And as we were talking about before we hit the record button, certainly in terms of the $2,000 line, obviously these things don't always go up in a straight line, although we've spent a couple of years touching, crossing over, coming back under that. So certainly if we're to the point where we've seen the last of gold below 2,000, some activity happening to support that, and wouldn't just be a spark out of nowhere. James, I'm curious though, in terms of gold and silver, we've seen quite a rally really since early October. How much do you think is due to what's going on in the Middle East? Obviously, you talked about how there's ongoing speculation of when the Fed's going to cut rates. I think there's also a degree to which people outside of the gold and silver community are also starting to realize there is the possibility of an issue funding some of the treasury debt that is set to roll over, and the pace that it's going. How do you break down what do you think is really driving this? Of course, we also have China continuing to import large amounts of gold. What do you think is really behind the key factors that are moving it?
I think you mentioned a bunch of good reasons why on day to day, move to move, that there's various rationalizations for why things are happening. But ultimately, in the big picture of things, the amount of unbacked monetary aggregates that are kind of out there in the world, and when you're talking about the fiat currencies, the M0, M1 supplies versus the gold reserves that have been going up at record paces in the last few years, I think most people who are looking at this kind of understand that the central banks are ahead of the curve. They're the ones who are, who more or less have created this fiat financialized system, and it's kind of coming toward its in-game phase. That's at least what many of us believe in the bullion industry. And that's a long way still to go in terms of where that in-game phase is going to, what it will turn into eventually. But in that process, you're going to have a lot of confusion and a lot of instability. And gold enjoys instability, and gold enjoys recessions, and that's probably what we've got coming up: recessions and rate cut cycles and dollar weakness, because the dollar, relatively has been pretty strong versus other major fiat currencies around the world. But at some point, it's going to have a secular bear market that's going to run 5-10 years, maybe longer. And in that process, gold's going to reassert itself as numero uno in terms of store of value, that you can actually own outright and have zero counterparty risk with. So central banks are just ahead of that, I think, at the moment. And the others are following, but, it's more of like short-term, medium-term trades. But in the longer run, most of these people who are in the gold market and who will be coming in the gold market, I think, understand being on the long side is going to be the more consistent winner, because a price of $2,000 an ounce gold is going to be looked back upon as being something that was cheap, when it's all said and done. And it'll be cheap for many, many years, and probably forever, in the sense of the fiat currencies that you're using to denominate them in. I mean, they're going to just keep going higher because those are going to keep inflating away and debasing.
Yeah, and it's interesting that when you think about where the price is at, I mean, maybe people are getting a little more optimistic in the gold community in the past month or two. Yet you look back, $250 around the turn of the century, so about an 8x from there. Would be interesting if over the next 20 years you see something similar, and perhaps we're looking at the 2000 level as cheap compared to where things go from here. I mean, a lot of the factors that have driven the price from $250 back then are still in play, and perhaps a little bit
More so.
closer to a break point than what we've seen. Although on the silver side, we're still sitting around just a little bit over $24 today, had been above 25 and just a short time period ago. What do you see happening with silver? And are we close to the point where it catches up? How high does gold go? I mean, does gold get to 22, 2300 and silver is still under 30? Obviously on the silver side, a lot of people waiting for that moment where it reasserts itself. And I'm curious what you're seeing there.
Yeah, I've been watching of late, kind of the gold silver ratio and trying to figure out on the long term where the break is when it happens, kind of when silver will go on a good rally and run. If you look back at the long term, well, not even long term. I mean, if you look back over the last, say, 5 years or so, just on the gold silver ratio, I mean, if you see the gold silver ratio cut below 75, right now we're at 84. It's been going up lately, and that's why you've seen silver underperform gold. It kind of gyrates back and forth. You'll see gold stronger than silver and silver stronger than gold, vice versa, et cetera. But yeah, I mean, we're at 84, and to see it go back down toward the 75 level is really what I'm keying on. You got to see it go down to low 70s. If that's the currents, and silver is going to go on a major rally and major run, and I would expect that that's what's happening. You're seeing silver at 30 and then beyond when that move starts to occur. Specifically exactly when that's going to happen, I would assume it's probably around when the rate cuts are coming, and everybody in the market kind of sees it coming. And gold has already rallied really hard, and then people go for beta with the silver trade, and silver gets rallied upon after. So gold leads, silver follows. It's typical how it goes, and I would expect that would be kind of the same thing that we see in the future.
Okay, sounds like you are thinking that the rate cuts will be one of the key drivers for that, which now we're seeing possibilities of March, which I think might be a little bit early, but I'll pull up the probabilities here. Is that what you see really as the next stage forward here?
Yeah, the question I think is really, why are the rate cuts going to happen? What is the excuse for why they need to have the rate cuts? What kind of recession are we having? I mean, I've seen interviews or surveys out there with some of the highest net worth, investment family offices, et cetera, and as well sovereign wealth funds and pension funds. And in the surveys, they said, I think 53%, almost half of them said next 12 months you'll have a global recession. And here you're looking at the bottom half is probably the easiest one to understand, where you see the days to meetings and then the ease versus no change or hike. You see a huge amount of agreement that by June, almost 100% of them who've been surveyed say that there'll be a rate cut by June of next year. 86% in May. So the market pretty much thinks by halfway through next year, there'll be a rate cut cycle beginning. And sorry for all the stock bulls out there who've been waiting for this and think that the stock market's going to ramp and run higher. But I mean, the history of the rate cut cycle in the 21st century has been rate cuts happen because a recession happens and the stock market tanks, typically. Doesn't do well. Maybe it won't go down nominally, but it'll lose in real purchasing power because, I mean, ultimately, if you look at a long-term chart, gold and the S&P often meet at 1. And often in the gold bullion bull market, it goes beyond 1. Meaning if you have an ounce of gold, you can get, at least you can afford one share of the S&P 500. And I think in 2011, it got down to like 0.75. And I'm expecting in this bull market mania, it'll go down to half or maybe beyond in the spiking and the craziness that comes. So yeah, people who get stuck in, people who've been in the stock market, I understand, it's been a good place to be for the last 5, 6, 7 years, roughly, as long as you can stick out the craziness of COVID. But I get the sense that we're in that kind of bubble phase where it's gone down and people are kind of in that section of the bubble where it's like you're hoping to get back to new all-time highs and that things will go back to the way they were in the last few years. But I highly doubt that. I don't think that there's much room left fundamentally for the stock bubble to keep blowing out. So ultimately, I think we're going back toward a commodity bull run. later on this decade. And the ones that will lead the commodity bull run right now are going to be the monetary precious metals. We've talked about gold and then later silver.
Okay, and certainly I understand what you're saying, and we maybe have seen a lot of the run up already in the stock market as they've been anticipating the cuts. Anytime Jerome Powell doesn't guarantee that there's another rate hike, we've seen rallies in the stock market and perhaps a lot of what could be coming priced in already. Although back to the metals, as you mentioned towards the end there, you had an interesting tweet the other day that I was hoping you could perhaps elaborate on, saying silver most suppressed market since 1873, and you looked back at some of the values based on inflation rates and what things could have been, and I thought this was an interesting one. Perhaps you could walk through for people.
Sure. I mean, it's a long-term chart using the government CPI data, which really began getting rigged after the 1980 experience of almost losing to gold outright, in terms of gold being so expensive for a year or beyond that we could have gone back on a pseudo gold standard if we had so chosen. I mean, gold had been the amount of official gold reserves that the United States had. They were valued at such a high price that we could have covered the amount of fiat US dollars that were outstanding, at least on the M0 supply. So what we're looking at here is just taking all this on the left-hand side is taking the government CPI. And like I said, after that 1980 experience, the government, increasingly got to rigging the inflationary data. And it makes total sense. Their motive is, they're the biggest debtor, government ever, and they owe a lot of future payments based on what's happening with inflation. So of course it's in their best interest to underreport the inflation, and to increasingly do so as we get further and further down this debt super cycle's ending. And so that's what we have. We have a situation where they've been lying to us increasingly so for 4 decades, over 4 decades compounding. And the right side is the shadow government statistics, which is John Williams' website. And, I think it's the truth is probably somewhere between. It's very, very difficult to look at John's numbers looking backwards and seeing, a silver price high of $50 an ounce in 1980 worth at the moment 1,350 an ounce. I mean, that is how many multiples? $50 worth that much now from 1980 to today. The hard thing is that we get better and more productive as time goes on. And like, for instance, in 1980, our productivity wasn't near what it is now in terms of doing things at a cheap level and the products that we create, doing it for less than we did back then. We've just gotten better with technology and machinery and just knowledge as human beings. So, but 1350, that's a huge multiple. That is how many? 27 times. I don't think the Dallas lost, the 27 times, that's a huge amount of multiples. So, if you just use the government CPI data, the 1980 high was 166. And I think this 1980 high of 166, that was a mania, but it wasn't near as big a mania potentiality that we have coming up for silver and gold. This one won't just be the Western world. This will be the entire world involved. And back then it was a lot different. It was the speed of technology, the speed of communication. That's the one thing that really changes, I think, the confidence level. We don't know exactly where that loss of confidence is, that threshold where all of a sudden you get the masses losing confidence in the stores of value that they're supposed to hold within each country. But I think that barrier is going to get met and crossed at some point, and that's where you're going to have this gold and silver mania phase kick into overdrive and go exponential. So, pick a number between 166 and 1349. That's probably going to end up being something where the spike peaks at, if the fiat US dollar can survive what we go through. And, there's people who think that it'll go up into hyperinflation. I don't know if I'm in that camp. I certainly hope not. I mean, the fiat British pound has been around for how long? Multi-hundreds of years. And I don't know when they go full fiat, I guess in the 20s and 30s, more or less. They kind of lost their backing with gold and silver, and the US dollar kind of became the reserve currency of the world after that. So, but the British pound's been around for a long time, and I don't know. It's hard for me to think that the fiat US dollar will go up in complete smoke. But even if it doesn't, we're going to go through a very, very highly inflationary period because we can't afford what we promised. And the most logical, most conservative historically, way to guess how this is going to go is that we're just going to base the hell out of the currency. I mean, that's the bottom line. The currency has to be devalued so that the government can nominally pay off what they have claimed they'll pay off. There's no guarantee as to what that's going to be worth, right? Like you'll get your social security check, it'll say a number on it, but it's probably not going to buy what it once did, you know, in terms of goods and services.
Yeah, and we've seen, as you pointed out earlier, and certainly we talk about quite a bit, we've seen central banks buying gold, we've seen investors going to gold. Sometimes there's debate, is silver a monetary metal? Is it an industrial metal? Obviously, it's being used heavily industrially. I think there's a subset of people that see it as a monetary metal as well. How do we know that that's still going to hold? Let's say we do have that situation where there's a lot of printing by the Fed, which that seems perhaps like the easy part to imagine. Is there a scenario where silver doesn't can maintain its role as a store of value, and it's just industrial and not treated the same as gold?
So that's, yeah, I mean, there's kind of two things to that. Gold, first off, is the one that's going to lead, and it's going to be getting its monetary bid mainly, right? Silver is the one that follows later when gold outperforms and really does well. Eventually, people kind of turn to silver for the beta trade. Oh, they just don't want to buy gold at a price that high, and they see silver can offer them similar characteristics, so they buy silver on a monetary level and they use it as a store of value. And that's been happening really since the 2008 global financial crisis, increasingly so in the United States and as well in other places like India and even in Europe. You know, I mean, for instance, in Germany, right? I mean, there's a lot of people who had grandparents or people who were in their family lineage who went through hyperinflations, and that experience is still there. Those warnings are still there, and that's why Germany's a powerhouse when it comes to buying gold bullion and silver bullion until recently when they raised the VAT taxes on it. But ultimately, yeah, silver's an industrial metal, but there are times where it becomes the monetary bid just jacks it up so high. And will it last forever in terms of the monetary bid for silver? That's hard to say because we don't know what system we're going into next and what the authorities are going to try and do. The authorities at some point could try, I could paint a dark picture where they're tyrannical and they don't want silver or gold being traded at all. And they try and, make it almost illegal to own or hold like they kind of did with gold in the 30s. But then again, if you look back at 1933, what happened is, yeah, they said bring in your gold and only like just over a quarter of it was turned in and 3/4 of it people kept. So they said, okay, nice fiat edict by decree, but we're going to keep our gold and you can go shove off. And that gold just stayed with people's pockets and everyone was mum. And that gold is still around in massive amounts, in terms of pre-1933 gold coinage. You see it on pretty much every bullion dealer's website. They sell these older great granddaddy hoarded coins, right? So, whatever the authorities try and do doesn't mean necessarily they're going to be effective at it, but it may change the way that the market trades, right? You may have a situation where the spot of silver is claimed this, but the bullion value on the street is a totally different thing. And so it's a question of what type of future are we going into? What are the authorities going to try and do? Those kinds of things. But ultimately, it just goes back to the fact that we have huge amounts of fiat currency monetary aggregates that are outstanding, and they have to devalue all the promises in the Western world that they've made that they can't keep. And in that kind of situation, gold and silver reassert themselves monetarily.
Well, I hear you, and that actually ties in nicely to the next thing that I wanted to go through with you, where here we have our long-term silver chart. This is going back to even the 20s here when silver at 60 cents. And in terms of, is silver matching inflation? Obviously, we could look at it, silver is half of its 1980 and 2011 highs. And certainly I think there's some fair thought put into that school of thought, although something I've thought about, mentioned a couple times here before, but 1980, we had stagflation building. We had people becoming concerned about the currency back then, which necessitated Volcker raising interest rates to 20%. 2011, we had some similar unusual conditions where something called QE2 was invented, and let's just monetize the bonds, and certainly had some people concerned. So in each case, maybe you could label that as fear or extreme concern. Obviously, 1980, the move was a bit quicker, lasting only a couple weeks and months versus had a whole summer and then another year or so prices above 30 back during the 2011 spike, but some brief periods and the system has been maintained. Yet if we look back here at silver 60 years ago, a buck 30 up to $25 today, that's about a 19x return, which I back out about a 5% return per year. If you are able to look at these as temporary anomalies just for a moment, whether someone agrees that's the case or not, take those out, and our chart of silver responding to money creation, not entirely dissimilar from what we see in gold here. So curious any thoughts you have there. I mean, is that a reasonable way of looking at it? And you could say that silver has been a pretty good hedge against inflation. And if you ever do have a failure in the treasury or just massive money creation, then perhaps that's when you see, maybe for a more extended period of time, a bigger spike. Curious any thoughts you had on that and what might be a good way to be thinking about silver over time.
Right. So gold, the chart that you showed earlier, I mean, since 1970 to today has outperformed the stock market. Someone would say, well, that's because it was, artificially suppressed in the 60s at $35 an ounce. Cool. Same story since 2000. I mean, 2000 to 21st century gold has outperformed the stock market in general. If you look at the overall price performance versus the S&P, et cetera. And I'm not bringing dividends or compounding and dividends into this. If you did what Warren Buffett did perfectly, then you probably outperform gold. But generally, most retail investors aren't that way. So gold is done just fine in terms of storing your value in the 21st century. And I don't see any change in direction fundamentally as to why it wouldn't continue to do that for at least the next foreseeable 5, 10, maybe 20 years. But in terms of silver, silver has been artificially suppressed for a long time for the most part. There's been a couple times where it kind of started to get away and run away, and eventually that'll happen again. But I mean, since the demonetization of silver in like 1873 after the U.S. Civil War, I mean, the price of silver or the value of silver has most of the time been suppressed. And so we truly don't understand where silver really belongs in terms of its relativity to gold in a modern industrialized world that we're in today versus, 1873 is a totally different story. I mean, the amount of gold and silver that we could pull from the ground was nothing compared to what we can do today. So we're just in a different era, but we're in an era that's a lot more dangerous and a lot more leveraged in terms of giving potential for gold and silver to really go crazy. Yeah, so silver had a couple runs, right? The 70 to 1980 run was driven by a lot of inflationary fear, and obviously there's a mix between greed and fear that come when it comes to silver and gold. Both of them are drivers in terms of why people go into them, buy them, why they get levered in long into them, et cetera, et cetera. We also had a run like that from 2000 to 2011. And, right now, last 3 or 4 years, we've been consolidating in a range, but generally those types of consolidations are the precipice before the next major spike. Like if you look at that pre-2011 spike, you see that gyration from the 2008 high to the 2008 low during the GFC, that whole spiking area. Yeah, that whole thing. You can see how it kind of went down, up, and then boom, it shot off. We're kind of still in that down level, but wait till we get beyond 30 and see what happens. That's really what happens when we clear 30 and it's 32, 33, and it's driving up toward 40. And then of course, 50 will be the next hurdle, and that'll take time as well. But ultimately, silver is going beyond 50 an ounce. And the question is, what happens? What kind of energy is exploding beyond 50 an ounce? And when does that happen, and under what conditions? But yeah, I mean, silver is just one of those things where you can make a lot of value gains with silver if you time it right and you hold a decent position and you ride out that era where it's allowed to kind of run, and we can allow it to run and see where fair value might be. So when that happens, when you start having that major run, as you continue to get profits, your position might grow in terms of what your silver wealth is versus the rest of your wealth in liquid net form. And for me at that point, if you have silver 75, $100 an ounce, it would make sense to then take some of the silver that gains that you have and probably sell some, take some profit, move it into another asset class that's real, maybe real estate, what have you, something outside of the fiat financialized matrix that I think at that time is going to be falling apart. And just take a little off the table. You never want to keep all your eggs in one basket, and especially if that basket keeps growing, you always want to take some profit along the way. But as long as you're under a full fiat currency dystopic regime like we've been for the last 50, 60 years, as long as they're trying to pull that stunt on you, you always want to keep some physical bullion and kind of keep mum as to how much you have and who knows about it. But in the end, having some of that makes sense long term because it typically does well in terms of storing value in a system like that.
Yeah, and James, one question based on something you were saying in there. You mentioned going back to 1873 that silver has been suppressed. And for some people who might be hearing that school of thought for the first time, or for other people who have heard both sides of that argument, I was wondering if you could just be a little more specific what you mean there and when you say that.
So right now, I'll get to the modern day equivalent of that, but I think when you look at the 1873, what happened, it was the silver demonetization. What you had in the United States was a lot of people moved out west for the California gold rush, and there was a lot of development out west. But the banking power really was still in the industrial Northeast, especially in New York. And they had a lot of gold. They didn't have all that much silver. And those wildcats out in the West had both. And they wanted to consolidate and basically drive them out and buy them out for cheap. And in order to do that, the best way to do that was to demonetize silver, which they could mine pretty easily, and they were getting a lot of. When you had a lot of silver, you were able to pay off your debts. But if you all of a sudden make silver not legal tender, then now you have to pay your debt back in gold. So good luck. We have a lot more gold than you. If you can't pay your debt, we'll come and buy you off for a dime or nickel on the dollar that once was worth, and we'll just get larger and more powerful as the decades unfold. That happens today, but it happens a lot faster than it used to. The silver demonetization took 20 odd years to kind of create a political revolution in the United States with the free silver movement. And anyone who knows anything about William Jennings Bryan and the free silver movement understand that people out west weren't happy with the fact that silver was demonetized because it was a consolidation of all the wealth that they had created. And the banks were coming after it and then consolidating and taking them over and ruining their lives. And so you had a huge political movement in the early 1900s, and the free silver movement didn't work, and they lost, right? But pretty much since that time, silver's kind of been kept, under wraps. Only in the 70s was it allowed to run with the COMEX trading that happened in the late 70s, and then as well we had it in 2000s where consistently from 2001 to 2011, the levered longs on the silver side won out mostly versus the levered shorts. And that obviously changed from 2011 to 2015. It was the other way. 2016 to 2020 or so, it was pretty, slightly up for the longs. But COVID happened, and people, who were caught long got crushed because you had the spot price rise that, drive down to 13, and then same story, flip it. We go 13 to 30 very quickly. And here we are now. Last few years, people are tired. They're fed up. They're sick. They go, how long is this manipulation going to last? Well, it's going to last until there's shortages, until you find a place where it's very hard to even get the stuff because it all kind of goes in hiding. And all you can do is go buy the unsecured derivative. You can go buy the unsecured ETF slush funds. You can't find any bullion. And if you do, the prices are exorbitant, right? 2020 was kind of like that, 2021, 2022 in the bullion market, but we're going to see it again, in the next second half of the global financial crisis kind of comes about, and we have to go through a major reckoning of the system. You're going to have another shortage era where bullion will just diverge and outperform any unsecured derivative that's available in the system. So what you see is a lot of front running. You see a lot of people, central banks buying at record size in gold. You see China buying huge amounts of industrial silver because they know they need it. It's like part of their economy. If they don't have massive amounts of 1,000-ounce bars to produce widgets and electronics and solar panels, they're going to be caught short, and that'll be a problem for them. So I think they've been front running it over the last few years. A lot of that ETF silver has probably been going to China. You have a lot of savvy, I think, United States citizens who understand the long term of this and who have been buying in major quantities since 2008. but and have had patience, waiting on this. But we're one of those people. You and I are the same. We're in that camp, and the fundamentals haven't changed. Nothing has changed. The question is, are you willing to stick it out, and are you willing to actually have a portion of your portfolio to benefit when this blow off finally does occur again?
So you think that this is headed to a shortage at some point based on the way
Sure,
everything lines up right now?
totally. I mean, you have a situation where people look at $2,100 gold and what happened on Sunday night is like, oh, that's like a blow off top. Now we're going into a bear market. It's like this is not even close. Like $2,100 an ounce gold is dirt cheap in the big picture of things. I mean, you have third world countries that sell off their gold at cheap prices because that's what they're told the price is. But eventually, when gold remonetizes itself and it starts going back toward a situation where we have 40% coverage of the monetary aggregates. I mean, you're talking about gold at $10,000, $15,000, $20,000 an ounce. If we swing back toward a world where we have a better coverage of official gold and the monetary aggregates. And right now, I mean, we're at low single digits. It's not even close. We have many multiples to go and a long road ahead. But this is just a start. I mean, we strap in. This is not. I don't think it's happening overnight. I think it's going to be many, many years ahead. Maybe there'll be a couple. There'll be a couple news events where it does gap up in multiples. That's possible. Where the system has to be reset because they want to get it overdone quickly. But yeah, gold's got to go a lot higher. It's got to go a lot higher. This is just kind of like the blips that you're seeing before it starts to really make a major move.
Yeah, and perhaps one final one to wrap up on along those lines. Another factor that you mentioned in one of your videos, I believe this was from the one last week, where you have 71% of advisors have 0 to 1% exposure to gold. I'm guessing it's even lower for silver. And certainly if we see that change, I guess that's a little bit of a binary where we imagine if silver gets over 30, if gold starts really moving, gets to, we've seen it in 2100, but once you have that factor change, then that could certainly be another driver in what we could see going forward.
Yeah, certainly. You have a huge amount of capital, much, much larger in terms of the nominal amount that's outstanding in the world that's uncovered, untouching silver or gold. And this is investment advisors, and this is, I believe, Tabby Costa published this. This is Bank of America Global Research. So this is just the percentage of investment advisors that have exposure of nothing to 1% in gold, and that is the vast majority of them. So many of them have absolutely no allocation. And what you end up having in gold is kind of a positive feedback loop where if you buy gold or if you allocate to gold and it performs well, it creates a positive feedback loop, meaning that more and more people kind of start following toward that. And then you end up having a commodity bull run with gold being probably one of the major leaders of that commodity bull run. And you'll end up seeing a lot more allocation, a lot more hot money, a lot more capital flows chasing the sector. So it just shows you how far away we are. I mean, back in like the late 70s, early 80s, investment advisors in general would tell people, oh, you need to have 10% allocation in gold and silver. And that was just typical, very typical. And that trope still exists today. People still talk about 10% as if that's a logical amount of allocation for someone's liquid net worth to be in a bullion or precious metals related when we live in a full fiat financialized world that's coming undone. That's basically where that trope comes out of. It's the 1979, 1980 era. But yeah, I mean, that's what you're looking at. You're looking at a system where the central banks are front running it, and eventually investment advisors will catch on, but that'll probably be around $2,500, $3,000 an ounce gold, and they'll create a positive feedback loop that could drive it much higher.
Well, that's certainly one of the factors that I think people are looking forward to, and a lot of reasons to expect that. We have not seen the end of gold bull market. I think you're correct on that, especially when we look at and see what's going on in the world. And James, perhaps before we close up, you could let people know where to find you. Obviously, you have the great SD Bullion YouTube channel, and where you keep people updated on a lot of these things that are going on, and maybe you could mention what you're doing there.
Sure. So every week, typically Friday at the end of trading, I'll publish a video that usually runs 10 to 15 minutes long. And I just try and curate the most important information that I came across for the week that's gold and silver related. A lot of it's data driven, a lot of charts and graphics and such like that to try and create a narrative. I'm trying to explain what I saw and what I think in terms of what it means, perhaps, and what the future may hold. So I try and give a short synopsis so people's time is respected and they can come through and watch within 10, 15, 20 minutes. And I try and give them the gist of at least what I saw that week, what types of things are on my radar and what they may find interesting as well. And so, yeah, that's basically what I'm doing for SD Bullion for the most part. And then I'm on Twitter. You can find me at James Henry and at James Henry Ann on Twitter, and I do publish a lot of charts and data and graphics on that as well. And it's gold and silver related, pretty much the entire Twitter handle.
Well, James, I appreciate all you're doing out there for the gold and silver community, providing a lot of good information and not ramming it down anyone's throats, but just letting people see what you're seeing going on out there and giving them some things to think about. And of course, it's always a pleasure to catch up with you again on the show. So appreciate that and everything you're doing, and hope you're having a great holiday down there and getting ready for 2024, which I imagine will be an eventful one in the financial markets. I suppose they all are in some sense, but yeah, it should be an interesting time for gold and silver, and we'll catch up again and do this soon.
All right, Chris, it's good to be with you, and cheers to everybody out there who watched.
All right, thanks, James.